How is everybody doing? If you're new to the channel, my name is James Bridgeforth. I'm a young and very successful investor who has generated multiple tens of thousands of dollars investing in the stock and crypto markets. And in this video, I'm going to be breaking down exactly what the market has been doing over the last couple of months. What are the catalysts that have caused this market to go down, and what can you do to position yourselves and how you can educate yourselves so that in certain moments you're not being fearful, that you're being educated, and you're not making costly decisions. So first, starting off with what has been going on. I want to first start off by pulling up an article. This is actually going to be from, I believe this is PBS News, and it's going to talk about October 10th. So if you aren't familiar with what happened on October 10th, this is exactly what happened. Wall Street tumbles in its first day since April after Trump threatens more tariffs on China. This threat is actually very significant. This day, the stock market, the S&P 500, took a tank of 2.7%, its worst day since April. The Dow Jones industry dropped 878 points in 1.9%. And then we also have the NASDAQ. It completely fell 3.6%. Well, when we look at the charts and we go to TradingView, I'm going to pull up the SPY on the chart. It should be on the screen as well. You're going to be able to look at October 10th. October 10th, you are going to see this massive red candle. These are the days in the market where the market is tanking, and this is actually going to be on our one-day time chart. And the way that I like to invest is by looking at support and resistance levels. So if you look at this, you can see that this is going to be at our 50-day moving average. This is the average that the stock or the indice in this position will actually be moving over this 50-day time frame. So when we look at the S&P 500 or the SPY, we can see that it took a massive dip to our 50-day moving average. This will also be a great buying opportunity if you were looking to buy the stock market as a whole. So when you look at your position, how would you position yourselves in the market, and what are some other things that cause this to go down? Well, we can also look outside of what Trump has done in the tariffs, and we can look from this perspective. See, we see that the market is very uncertain. And because of the uncertainty surrounding jobs data, surrounding inflation, this has caused Jerome Powell, the federal chair of the Reserve, to actually be uncertain on if he wants to cut rates or not. This uncertainty in the market causes the market to go down. See, there's two things that the market don't like. It doesn't like surprises, and it doesn't like uncertainty. And we had the first surprise with Donald Trump and us having the tariff wars with China. That's one. And then we also had the uncertainty that we have regarding our jobs data, our inflation, and even if we're going to cut interest rates. So that's the second uncertainty. These are things that are going to cause the market to go down. But remember that the assets that we're investing in aren't changing at all. The only thing that's changing is the environment that they're operating in, which is the main point as to why you need to educate yourself. If you're not educated, you won't be able to truly understand and decipher what are the things that is holding me back and why is my portfolio going down. Because your portfolio going down isn't something that should scare you, but it should intrigue you to do more research to understand what is causing this problem. See, when we look at it from this perspective, we're able to make timely and smart decisions that will be in the best benefit of our portfolio and of our financial situation. So when we take a look and we understand what's going on in the market, we have the uncertainty, we have the tariffs going on. We want to look at this from the perspective that we've actually made a great recovery in the stock market as well since this time. So we had a great dip on October 10th, but since then we've had a consolidation phase. We've gone up, we've gone down, but ultimately we're closer and closer to our all-time highs. See, we're in a position to where we've had this massive dip, but we're continuing to work our way back up. So when we're at all-time highs, we actually don't want to put in big amounts of money, but we actually want to be dollar cost averaging. So if you were active in the market during October, or maybe even a little bit later after that, then you should have been doing massive dip buying. So when you had a dip, maybe it'd be 5-10% from all-time highs. 10% is actually going to be a technical correction. This is the moments where you want to buy and implement all of your buying power. See, now that you have implemented your buying power throughout the rest of them, whether it's your favorite assets, you can look at Nvidia, you can look at Tesla, you can look at Palantir, Meta. These are some of the stocks that I own and invest in. These are things that I'm going to be dollar cost averaging throughout. Now, if you aren't familiar with what dollar cost averaging is, it's basically where you buy a little bit of your investment every single day, week, or month. This could be something basically to where you average your cost per share out, lower your average cost per share, so that when your stocks or crypto runs up in the positive direction, you're able to benefit greatly because at the bottom you are buying an abundant amount of shares. So throughout this process, I'm not going to be buying super heavy at these all-time high prices, but I will be dollar cost averaging into some of my favorite investments, like some of the stocks that I just named. So when moving on, I want to also touch on Bitcoin and what Bitcoin has been doing at the time of this video. So at the time of this video, Bitcoin is currently sitting at $85,000. That actually takes a dip from our all-time highs. We were sitting at $125,000 per coin, but now we're sitting at $85,000. That's about $40,000 down in the downward direction, which many people are panicking. But if you truly understand the blockchain technology and you understand Bitcoin as a whole, this is a major buying opportunity. See, many of our other stocks, they've recovered in the upward direction, so that's why I'm dollar cost averaging, because we don't want to buy at all-time highs at heavy prices and raise our average cost up. But Bitcoin, a great asset like this, when we have a massive dip and it's not just at all-time highs, but it's actually tanking and it's under $90,000, in a few years we could be begging to see a $90,000 Bitcoin or $85,000 Bitcoin in this case. So this is the moment that I'm going to take advantage of, and I'm going to be actively buying during this time because I understand that this is an investment in an asset that I'm looking to hold for the long term. This isn't this something, this is actually going to be probably a rounding error in the future. See, we're at a price of 85,000, and I truly believe we're going to consolidate around this because I truly believe that we're also at a great support level. We could even get as low as 80,000, and if we break below those levels, I believe that we could go to 74,000, which is our major level of support. See, support is basically when you have a chart and you have these candlesticks and they hit the same floor multiple times. That's going to be your support level. But if it hits the same ceiling multiple times and it's not able to break through, that's going to be our resistance level. See, these are two things that you want to focus on. And then we also have moving averages, which are indicators that I can make a whole separate video on. But just for this video specifically, I'm going to be buying more Bitcoin, buying more heavy, dollar cost averaging, even implementing more money outside of my dollar cost average, because I do believe this is going to be a rounding error in the future. I believe 3 to 4 years from now we could be at a $300,000, $400,000, $500,000 Bitcoin, so we're buying at 85,000 or waiting until we get to a support level of 74,000 isn't going to truly matter. That's just a $10,000 gap, but I know we're going to much higher prices. Now that we touched on stocks, crypto, Bitcoin, whatever it may be, and we've also talked about the reasons as to why these assets have been taking a dip, let's look at the fear and greed index and let's see, is the sentiment of the market still fearful and if we're making a recovery or not. So, around a month ago, our fear and greed index was actually at extreme fear at around 22. At the moment, our fear is sitting at around 43. Now, if you weren't in the market around this time, then it was pretty interesting as well. It was one of the first that I've ever seen in my young investing journey, is that when we were at an extreme fear level, we were at around 22, even lower than that I saw, and the market was so fearful. And many people want to say that you want to buy the fear and sell the greed. So when you look at this, you can see, okay, extreme fear is when I buy the most, and at the extreme greed is where I sell. But in this moment, I was actually seeing that at extreme fear, the market wasn't even down that much. We were at extreme fear and the S&P 500 was down only 2% from its all-time highs. So what does this tell you about the market? That means that it's an overreaction to the information that we don't have yet and the uncertainty in the market. See, many people are so fearful because of the news coming out, but if they actually look at the technicals in the charts, then they will realize that our investments aren't down that far and that this is just a buying opportunity, maybe just slightly, but this isn't even a crazy dip. See, we've had much major dips in the previous years and even a couple of months ago, but these are the times to where you want to buy heavy. But in this instance, maybe you should just buy a little bit light, maybe just dollar cost average, and don't focus too heavy on the extreme fear, because while everybody else is fearful, we're simply buying. And this takes us into our education piece. In the times where the market is running up, do not look at this as an opportunity to just watch your portfolio take on all-time highs and just sit back and relax, but take this as an opportunity, because when we're at all-time highs, most of the time outside of our dollar cost averages, we're not doing much buying because we don't want to raise our average cost per share and take away from our overall gains. But this is the time where I really sit down and think to myself and start to do as much research as possible. If I pulled up the chart and you don't understand support or resistance, or you don't understand moving averages, or how to identify what companies to get into, reading balance sheets and income statements, if you don't understand any of that, or if you don't read books, if you don't read books to change your mindset, maybe it's whether you have spending habits, or maybe you don't have, you need to learn how to pay off your debt. This could be anything finance related. If you need to take that time to start to educate yourself and you're becoming overwhelmed because at the bottom you're trying to figure out what stocks and assets to invest in, but you don't know because when we were at all-time highs, you weren't doing the knowledge. See, when we're at all-time highs, this is a great opportunity to read books and start to educate yourself so that when the market does take a dip, because we're not going to be at all-time highs forever. We're going to take dips. We're going to take corrections. We're going to take natural technical recessions. All of these things are natural and go with the fluctuation of the market. No chart is just going upward in a straight diagonal line like this, but you're going to see constant ups, downs, ebbs and flows, and corrections, and even consolidation phases. The market goes in three ways. It goes up, down, and it consolidates. So if it goes up, you can understand that we're either going to consolidate or go down next. It's not going to continue to go up. So during these moments are the times where you really need to educate yourself. And since I've been gone, there's been a couple investments that I've heavily been adding to. And I actually even sold some of my position to move it into other areas so I could have more buying power. And one of those areas has been Bitcoin, which is one of my personal favorite investments. And then I also hold other investments such as Nvidia, Meta, Palantir, Tesla. All of these are great companies that I believe are going to perform well in the long run as we look at AI as the future, as we look at tech as the future, and as we have a finite supply of money that I also look at as a digital gold that we could truly start to move and revolutionize the way that we look at investing as a whole. I truly believe that this is something that is going to be drastic over this next 4-year period to where this is going to be one of the most important investing periods of your life. Don't let this moment slip away without doing the knowledge, and you finally need to start taking that leap. So educate yourself, remember to save your money, remember to truly do what you need to do so that in the future you can do what you want to do. So I appreciate everybody for watching this video. Feel free to like, comment, subscribe, turn on that post notification bell so you never miss an update, and I'll see you guys in the next video.